Hey, what's up, everybody? How you all doing? Today's Friday. That's right. And before I get into the economic numbers and what's happening with the market, it's Friday. So, I woke up at 4:30 in the morning. I went for a 7-mile run. I run every Friday. And the other days, I wake up at 4:30 in the morning and I go to the gym. Why do I do that? Well, I like to stay in shape, and also because it is great for the mental game, the discipline, that waking up early, doing something physical, pushing myself, going past my limits. That all ties in with the mental game. Same sort of stuff when it comes to the markets. Having patience, having discipline, being able to face adversity and rise above it, being strong, being resilient, being patient, all that stuff. All right, let's talk about the market now. Let's talk about first of all, let me talk about the number. All right, those of you who got my email last night, I said in that email that the payroll number was going to be 240,000. It came in at 235,000. You are not going to get better forecasting than that, period. You are just simply not going to get better forecasting than that. And I did the whole breakdown. I looked at employment and withholding tax deposits, month over month, year over year, average daily tax deposits, unemployment insurance benefits paid out, month over month, year over year, initial claims, the whole entire thing. I broke it all down. I came up with 240. The number was 235. All right. So that is, you're not going to get better than that, period. As for the markets right now, we see dollar a little bit lower than where it was prior to the release of the number. Actually, in certain pairs, like if you look at euro dollar, that's trading pretty strong today, 106.60, 106.70. And that might be, it's partially, I guess, due to the sort of Goldilocks nature of this number, which I'll get into in a second. But also, if you look at the French election polls, the polling results over there, now showing Le Pen and Macron tied, all right? Whereas it was looking like a slam dunk for Le Pen. Now they're looking tied. So I don't know, maybe that, look, if Le Pen doesn't win, the euro is gonna take off. I'm telling you, the euro is gonna take off. Everybody's short the euro. The specs are big time short the euro. And they've been short the euro for well over a year. All right. Let's look at this number, which they're calling now a Goldilocks number, right? These crazy terms because they're saying, well, it was a good number, but it wasn't, crazy big. Like we had the ADP number at 298, almost 300,000 on Wednesday. So they're saying that it's a 100% done deal that the Fed's going to raise next week, but it lowers the likelihood of 2, or some were even saying 3 more rate hikes this year. To which I say, don't be too sure. Don't count your chickens before the eggs are hatched, all right? And that's because rate hikes, what are rate hikes? They're price increases. Every time we see a rate hike, the inflation rate goes up. The Fed is literally creating its own inflation here, but they don't understand that because all of mainstream economics, all of mainstream economics is completely out of paradigm on its understanding of, the monetary system. They still think we're on a gold standard. They still believe in the theory of loanable funds, all this kind of stuff. And they think that raising rates quashes inflation, when in fact, it's two things. It's a price increase. Most fundamentally, it's a price increase. And secondly, it's a fiscal expansion, all right? So that is working against their ends. That's working against their goals. I mean, they think they're trying to quash inflation when, in fact, every time they raise prices, you create more inflation. So that's how come we see every time there's a rate hike, you get a little knee-jerk reaction in gold. And actually coming into the time frame of that rate hike, if the expectation is high, the zombies, what do? They sell gold. They buy the dollar, right? They sell commodities. All wrong. You should take that as an opportunity to do the opposite. As soon as they hike rates, you've just increased the inflation rate. Gold's going to go up, dollar's going to come down, etc. So I am short the dollar. I haven't added anything in this recent pop over the last, day. But I am short dollar yen. I'm long New Zealand against U.S., long euro, so a long British pound. So there you have it. And of course, long gold have not added anything on this downswing, but I said we could see 1185 on this downswing. We got to what, 1195 or something today. We're 1199, so no big deal. By the way, some developments in the open interest on gold. We actually saw a build-up yesterday, which indicates that, you know, there was a liquidation from the highs, and then yesterday on the lows, they got short again. It's the same thing. They sell the bottom. They buy the top. Oil, interestingly enough, we have not seen any net liquidation yet. So, of course, the market's trading back into 48 handle. We are still short. That's $6,000 per contract. We're short from 54. I totally called that one as usual. All right, so that's where we stand. Stocks are a little bit up today based on this, whole Goldilocks scenario. Again, this is the wrong reading, but, we're talking about zombies here. We're talking about people who basically don't understand the effects of rate hikes or the fiscal flows or all the things that I talk about. So that's where we are. Probably going to end up being quiet for the rest of the day. We got we got a snowstorm here in New York City. No accumulation really, but it's late, man. It's March. We're almost in spring. Come on, give me a break. I'm done with this winter, I tell you. But I ran this morning. Woke up 4:30, ran 7 miles. Awesome. All right, everybody. I'll see you later. Bye-bye.